Hey everyone, welcome back to Corporate Decoder, the place where we decode those complicated corporate filings and make them easy to understand. Today, we're diving into some interesting news from Velo3D. Incorporated, they're talking about government contracts and some adjustments to their earnings forecast. So, what does this filing tell us? Well, Velo3D Incorporated, or Velo3D as they're also known, has announced they've entered into a contract with the US Department of War's Defense Innovation Unit. This sounds like a big deal. It means they're going to be working on solving some key problems in how the defense industry manufactures important parts. Think of it as helping to clear out the slowdowns and make things flow more smoothly, which is pretty crucial when you are talking about defense. But it is not all good news. They're also updating their money predictions for the whole year. Because of that big government shutdown that lasted a while in late 2025, it messed with everyone, including Velo3D government officers were limited in what they could do, and this directly affected Velo3D's ability to do their regular business. Because of this, they're now expecting their total earnings for 2025 to be somewhere between $45 million and $55 million. This is a revision, meaning they had a different prediction before, and this shutdown forced them to scale it back. They explained that the shutdown caused delays in getting approvals and pushed back project timelines. However, the company managed to keep its operations running and kept its customers happy during this tough time. They believe this means they are in a good spot for a strong comeback. They think things will get back to how they were before the government shutdown as they move into 2026. Let's look at some of the basics about the company, Velo3D. Incorporated is traded on the Nasdaq under the symbol VELO. Their stock is what is called common stock. Interestingly, Velo3D is identifying itself as an emerging growth company. This is a label for newer companies that might get some regulatory breaks, meaning they do not have to follow all the strictest financial reporting rules right away, which can save them time and money as they grow. They're also saying they've not opted out of the extended transition period for new accounting standards. What that means in simple terms is that they will be adopting new financial reporting rules as they come out, which is pretty standard for most companies. Now, any company talking about future plans or predictions will always include a disclaimer, and Velo3D is no different. They're telling investors that what they say about the future might not actually happen. They use words like expect or anticipate to talk about possibilities. But these are not guarantees. There are a lot of things that are hard to predict. Like if they'll get more government contracts, how successful their customers will be using their products, or if the government might shut down again. All these things, and others they mention in their longer filings with the SEC, could cause their actual results to be very different from what they hope for. They're being very clear that you shouldn't bet everything on these future statements. And finally, with this report, they're including a press release. This press release likely contains more details about the contract with the Department of War and elaborates on the reasons for the revenue guidance change. They're also providing something called an interactive data file, which is basically a machine-readable version of the report. So, what is the story here? Velo3D Incorporated is securing what sounds like a significant contract with the US Department of War. This is a positive sign, suggesting their technology is seen as valuable for national defense manufacturing. However, the same government shutdown that probably delayed some of their operations has forced them to lower their expected earnings for the year. This highlights a key risk for companies that heavily rely on government contracts, the unpredictability of government operations and funding due to shutdowns or policy changes. Despite this short-term setback, Velo3D seems optimistic about its future, believing it can bounce back quickly in 2026 once government operations normalize. It's a classic case of a company navigating the complexities of doing business with the government, balancing growth opportunities with inherent risks. Now, for my take, Velo3D Incorporated is clearly trying to grow its business by tapping into the defense sector, which can be a very lucrative but also very volatile market. The contract with the Defense Innovation Unit is a strong indicator of their technological capabilities and potential. However, their revenue guidance revision due to a government shutdown is a stark reminder of the dependence they have on government funding and operations. This dependence introduces a significant risk for investors. This means weighing the potential upside of these large government contracts against the constant threat of delays and disruptions caused by political or administrative issues. While they are positioning themselves for a strong recovery, the market will be watching closely to see if they can consistently deliver on their promises and navigate these external challenges. It's a company with high potential technology but operating in an environment with significant external uncertainties. Alright, that is our breakdown of Velo3D Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the defense contract is a game changer, or are the risks from government dependency too high? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community linked in the description below for more discussions. Thanks for watching. See you next time.